If you are working in the finance industry and want to strengthen your expertise in managing financial risks, making strategic decisions, and advancing toward leadership roles, the Executive Certificate Program in Advanced Financial Risk Management from IIM Mumbai is designed for you. In a sector where accuracy, forecasting, and risk intelligence directly drive career growth, this program prepares you to navigate today's fast-changing financial landscape with confidence. If you have 5 to 10 years of experience, this program helps you sharpen your decision-making, analytical thinking, and risk evaluation capabilities. You gain deeper understanding of financial models, budgeting, feasibility studies, and execution planning. Professionals in this range often see around 30 to 35% salary growth as they step into more specialized roles in financial analysis, portfolio risk, treasury, or credit risk. For professionals with more than 10 years of experience, the program enhances your ability to manage financial structuring, governance, strategic planning, and large-scale risk frameworks. With these advanced abilities, senior professionals typically achieve 40% or more salary growth as they move toward leadership roles such as risk manager, finance controller, head of risk, or senior treasury specialist. What makes this program truly valuable is the depth of skill development it provides. You learn integrated concepts across project documentation, financial structuring, cost optimization, scheduling, project finance, and technology adoption. You also build the ability to lead complex financial risk initiatives that influence organizational stability and growth. The Executive Certificate Program in Advanced Financial Risk Management from IIM Mumbai equips you with industry-relevant knowledge, strategic insight, and leadership readiness, helping you advance your career and become a high-value professional in the finance industry. Module 1 of the AFRM program, Quantitative Methods, helps you build that understanding. You begin by learning about discrete and continuous probability distributions. These concepts show how different financial outcomes can occur and how likely each one is. You also explore how to estimate important parameters and understand the difference between population and sample statistics. The module then introduces Bayesian analysis, which helps you update your conclusions as new information comes in. You also learn the basics of statistical inference and hypothesis testing, tools that allow you to check whether your assumptions about data are reliable. Next, you study correlation and linear regression with single and multiple variables. These methods help you identify relationships in financial data and understand which factors truly influence each other. Finally, the module covers time series analysis and forecasting, which are essential for studying market movements and predicting future risks. By learning these techniques, you're not just improving your own analytical skills, you're bringing value to your organization. Strong quantitative abilities help improve risk assessment, strengthen forecasting, and support clearer, data-driven decisions that reduce uncertainty and protect business performance. Quantitative methods gives you the foundation to understand financial risk with clarity and confidence. In finance, managing risk often means understanding the tools that help you transfer, control, or protect against uncertainty. Module 2 of the AFRM program, Introduction to Derivatives, is designed to help you understand those tools in a simple and practical way. The module begins by explaining the structure and functions of financial institutions and how they participate in derivative markets. You'll learn how both over-the-counter markets and exchange-traded markets operate and what makes their mechanics different. From there, you dive into the core derivative instruments: forwards, futures, swaps, and options. You explore how each of these products is structured, how they are valued, and why they are used. You'll also learn how derivatives support different financial strategies, such as hedging against uncertainty, taking speculative positions, or identifying arbitrage opportunities. The module further introduces important concepts like interest rates and measures of interest rate sensitivity, which are essential for pricing and managing interest rate-linked products. You'll also study how derivatives help manage foreign exchange risk, and you get an overview of corporate bonds and mortgage-backed securities, understanding how these instruments behave and how they fit into the broader risk landscape. By mastering these concepts, you're able to support your organization in building smarter hedging strategies, protecting cash flows, and reducing exposure to market volatility. Strong derivative knowledge can help businesses make more informed decisions, control financial risks more effectively, and create more stable long-term outcomes. Introduction to Derivatives gives you the clarity and confidence to understand how modern financial markets operate and how these instruments shape risk management. In today's financial world, risk is no longer limited to markets and numbers. It's shaped by technology, innovation, and even the environment. Module 3 of the AFRM program explores this new landscape by bringing together AI, machine learning, fintech, and climate risk. The module begins with an introduction to artificial intelligence and its growing role in risk management. You learn how AI helps organizations process large volumes of data, detect patterns early, and make faster, more informed decisions. From there, you move into machine learning models and how they are used in investment management. You explore how algorithms can identify trends, predict asset behavior, and support portfolio strategies that are more adaptive and data-driven. The module then shifts to the world of fintech. You get an overview of technology-enabled financial services, such as digital payments, automated lending, robo-advisory, and blockchain-based products, and understand how they are reshaping customer experience, operational efficiency, and risk frameworks across the industry. Finally, the module highlights the importance of climate risk. You learn how environmental factors, regulatory changes, and sustainability concerns are becoming essential parts of enterprise risk management. This helps organizations plan more responsibly and protect themselves against long-term, non-traditional risks. By understanding AI, ML, fintech, and climate risk together, you gain a modern, well-rounded risk perspective. These insights help your organization innovate confidently, strengthen its risk models, and stay prepared for the future of finance. This module equips you with the tools to navigate emerging risks and lead in a technology-driven financial ecosystem. Market movements can create opportunities, but they can also introduce significant uncertainty. Module 4 of the AFRM program, Market Risk Management, focuses on helping you understand and manage this uncertainty using rigorous quantitative techniques. You begin with the core concepts of value at risk, or VAR, and other key risk measures. The module explains how VAR is calculated using both parametric and non-parametric methods, and how VAR mapping helps identify which positions drive risk in a portfolio. From there, you learn about backtesting VAR, an essential step that checks whether your risk models are performing as expected in real market conditions. The module then introduces expected shortfall, or ES, a coherent risk measure that goes beyond VAR to assess potential losses in extreme scenarios. This leads naturally into extreme value theory, which helps you understand rare but high-impact market events. You also explore how dependence between financial variables is modeled using correlations and copulas, techniques that help capture how risks move together. The course further covers term structure models of interest rates and explains volatility smiles and term structures, both of which are crucial for pricing and managing derivative products. Finally, the module provides an overview of the fundamental review of the trading book, giving you insight into modern regulatory expectations for measuring and controlling market risk. By mastering these tools and models, you enhance your ability to support your organization in managing trading exposures, improving model accuracy, and strengthening its overall risk framework. This module equips you to evaluate market uncertainty with precision and make decisions that safeguard your institution against volatility. Investing always involves balancing potential returns with the risks that come along. Module 5 of the AFRM program. Investment Risk Management is designed to give you the tools to identify, assess, and manage those risks effectively. The module begins with factor theory, helping you understand the key drivers that influence asset and portfolio performance. You then learn the principles of portfolio construction, including how to combine assets to achieve optimal risk-return outcomes. Next, the focus shifts to portfolio risk measures, where you learn how to quantify and monitor exposure across different investments. This is complemented by risk monitoring and performance measurement, which ensures that portfolios remain aligned with investment objectives over time. The module also covers portfolio-based performance analysis, allowing you to evaluate returns on a risk-adjusted basis and make informed decisions. Finally, you are introduced to hedge funds, learning how these specialized investment vehicles manage risk and generate alpha in different market conditions. By mastering these techniques, you not only strengthen your ability to manage investment portfolios, but also help your organization make smarter, data-driven decisions, optimize returns, and reduce unnecessary exposure point. Investment risk management equips you with the skills to manage portfolios with confidence and precision. Credit risk is one of the most critical challenges financial institutions face, as it directly affects lending, investments, and overall financial stability. Module 6 of the AFRM program, Credit Risk Management, provides a comprehensive framework to understand, measure, and manage this risk effectively. The module begins with credit analysis, where you learn how to assess the financial health of borrowers and counterparties. You then explore default risk and quantitative methods to estimate the likelihood of a borrower failing to meet obligations. You also study expected and unexpected losses, along with credit value at risk, which helps measure potential portfolio losses under different scenarios. The module further covers counterparty risk and the role of credit derivatives in mitigating exposure. Participants gain insights into structured finance and securitization, understanding how loans and other financial instruments are pooled and transformed, as well as the regulatory frameworks of Basel II and Basel III that guide prudent credit risk management. By mastering these concepts, you equip yourself to evaluate and manage credit exposures with confidence. Strong credit risk management not only protects your organization from losses, but also supports informed lending, smarter investment decisions, and long-term financial stability. Operational risks are the risks that arise from internal processes, people, systems, or external events, and they can significantly impact an organization's performance. This is Module 7 of the AFRM program, Operational Risk Management, equips you with the knowledge and tools to identify, assess, and mitigate these risks effectively. The module begins with understanding financial statements and analysis of financial institutions, which helps in spotting operational vulnerabilities and assessing organizational health. You then explore investment banking and corporate finance processes, learning how operational risks can arise in complex financial transactions. Participants also gain insights into the operations of financial institutions and markets, understanding the systems, controls, and frameworks that support effective risk management. The course combines real-world case studies with practical strategies, enabling you to apply what you learn to actual business scenarios. By mastering operational risk management, you help your organization enhance resilience, minimize disruptions, and safeguard performance. Strong operational risk practices ensure that processes run smoothly, employees are supported, and systems are robust against internal and external challenges.